Good morning, everybody. Today is the seventh day in the month of January 2022. My name is Heritage Adisa, market analyst at HotForex, and as usual, we'll check through the markets, see what the dominant sentiment is, see if the opportunities, and then how we can take advantage of it. But like always, please remember this is just a communication material. And nothing in this communication should be considered as investment advice or investment recommendation. This is acknowledged that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users will be responsible and liable. Now, what we have this morning, in terms of the overall risk environment, overall mood in the market, is a more mixed tentative start as well today. Again, and the reason for that is markets are lying in wait ahead of the key NFP, that's the non-farm payroll data that's later today. It's a major US data jobs data report, and then it also sets the tone for or serves as a key barometer for gauging government policy and federal the central bank policy, giving us an idea of where they are or what they're about to do, or more like an input, let's say like that, like an input for the Federal Reserve. Apart from that, it's also a major. And the reason why it's also key is because the US economy is mainly driven by consumers, right? So obviously they need to have jobs before they can spend, right? So that's also very key, and that will be a major focus. And then before key data like that, before any key data release like that, there's usually just that stall in markets where markets just laying waiting for the data to be released before looking to take any major positions, even in the day. Now, if you look closely, this is the US 500, right? We really like it as a key barometer, key, measurement of what the equity markets is saying generally. And if you look at today's session, for example, 7th of January, rather, you see that flat start, and it also mirrors what we had mostly throughout yesterday. One thing I want to also note is right now, or a couple of days back, when we were talking about this, we said we were trading at all-time highs. I wanted to be careful around, levels like this. I was around Tuesday, thereabout, right, levels at this. And then we saw, the US Federal Reserve, the FOMC meeting minutes, right, where we were more hawkish as expected. And then as we had that, then you saw that downside push lower in the equity market generally, in this case, the US 500. Now, why was this? The US Federal Reserve being more hawkish, looking to tighten policies, looking to increase interest rate faster, obviously is not as attractive to businesses because now money is reduced in the system, access to loans, access to all of that reduces. Now, because of that, you see that that's not a good input for businesses for stock prices generally. And then we saw equities push lower from there. But one thing you want to also know is that when you look at something like US 500, right, there's been no stopping it for months and months. It's been upside upon upside upon upside. Even when we had deep corrections over time, like the one that we had, early December as well, it still served as another key or attractive level to buy back from as always. Now we are back trading at this key level, right? If you look at, yes, the downside push here is there, but right now we're trading at this overhead resistance level, coming from early November thereabouts around the 4700 level, right? If you look at this level as well, it's also been an interesting one. You see key level of resistance. And now we've come back to retest it clearly, and we are struggling around this level. So in as much as hawkish Fed, you still want to be very watchful around these levels. I mean, the fact that we have failed to even keep below this level and we've stalled so much here, any sign of positivity from anywhere really could really serve us or could give us another reason or give markets another reason to buy this particular asset from this level again. But for now, obviously, want to be more patient here. If we get bad job numbers, not up to expectation, I think we are expecting about, let's see, quickly run there. All right, the US data, what is it? All right, good. We're expecting about 400,000 new jobs added to the US economy. If you get way less than this, right? Yes, it might not be seen as good, right, for the US economy generally. But if you look at equities, yeah, because that will also probably put into or playing to market focus. Okay, maybe the job market is not up to where we expect it to be. It could, not saying it will, but it could. And then we might, see calls for maybe slower rate hikes or maybe slower tightening or slower pace of tapering, all of that, or even a slowdown in tightening generally, right? That could be seen as positive for equity. So there is that to also watch out for this particular asset even going forward. And obviously, if we see equities push higher, that will be good for currencies like the Aussie, for example, even the Kiwi. So there is that to also watch out for on that front. And that's a similar story across equities generally, mostly flat to start the day, really lackluster performance across board, right? On the VIX side, yes, after the FOMC meeting, we saw that spike to the upside. Meeting minutes, we sort of spike to the upside, and then we've kept that, generally kept that gains really that we've had in, from the meeting. So there's that to watch out for. But if you look at today's session as well, another flat, another lackluster performance so far. And it's likely to continue like this until we get, the NFP jobs data released later in the day. For the oil market, we've been seeing continuous push to the upside. We've been seeing super solid trends in this. OPEC decided to keep to the 400,000 barrels per day production level, right? And then we've seen oil prices just keep being supported. Yes, we could talk about the virus cases, restrictions. We saw a few in Australia earlier, right? But because markets have more or less moved on from the Omicron worries. I mean, because major lockdowns are not likely. I mean, and it's not really fatal. It's not really, hospitalizations have really been lower. So markets have not really seen it as a major reason to, be panicked and be afraid. And even with that, even with the little lockdowns that we've seen, right? Obviously, we've seen it also be supportive for oil prices as well, but it's not really anything major. It's not really lockdown, we call it restrictions, right? But there's that to watch out for. Obviously, this push higher will keep being supportive for currencies like the Canadian dollar. And if you look at where we're trading right now, we're heading into this key $80 per barrel level. Interesting level as well in terms of QQ round number. So you want to also watch watchful around there. And it's also very close to, I mean, very close to the highs that we've had for years, going back to almost 7, 8, 9 years. So we want to also be watchful of that level. Apart from that, this $80 per barrel was also key level, going back a couple of years back. So you want to also be watchful at high levels like that, right? Apart from this, the bond market has also been an interesting one for, for the week. We've seen downside push in bond market and then upside for yields. And the reason for this has been clear and simple, being the Federal Reserve as well. With expectations for further rate hikes or faster rate hikes, obviously that is good for yields. And then we've seen it push bonds down, yields up as well. So we're going to leave that out and then cross over to the FX space. Now, for currencies, in today's session, it's been mostly a mixed bag. We've had the Aussie lagging the most amongst major FX, the Kiwi strongest amongst major FX. I mean, Euro strong as well. The dollar just being in the middle there, nothing really major to go on. And even these moves are still very marginal. I mean, the biggest mover is not more than maybe 0.25% net change. So that is also, let's see AUD NZD just quickly for net change. Let me just clean this up a bit. All right, let's see. Okay, so daily change, let's just see AUD NZD, right? In today's session, now we're even back at flat levels, really nothing major to work on here. Now, one thing I want to call our attention to, going into the NFP report. Now, like I said earlier, markets are expecting about 400,000 new jobs. First of all, the expectation is very solid, right? In terms of new jobs expected, super good. There are 400,000 new jobs expected. I'm looking for the unemployment rate. Unemployment rate as well, markets are expecting it to drop again to 4.1% from 4.2% previous, right? Which is also very interesting as well to watch out for. Yes, from here, hourly earnings as well, super expected to be better off, right, compared to the previous prints as well. So if we get super good job numbers, right, beat across board, massive variance as well, that would be good for the US dollar because it also plays into job markets getting to levels that they expect it to be, and then obviously good, and also plays into faster rate hikes, right? About 3 going into the year 2022. So there's that I also expect, and if you get that, what we need to look out for currency pairs like Euro USD, we'll look at USJPY, also AUD USD before we go. For Euro USD, first of all, right, this currency pair, we've seen it really stall from the downside that we had, for most of the year 2021 rather. And now we've seen it really just in recent time really just make higher lows, right, in recent time. Although all of these moves have still been in an overall range. I mean, it's not really done so much in recent time, but it's also something you want to also be very, very watchful about. If we get a solid print, right, in the job numbers, I expect this to, see further downside here. We could be very watchful of this key support trend line at this level, obviously, to, give us some form of support. But apart from that, that will also be interesting to watch out for downside on this particular one. USD has also been an interesting one to watch out for. Upside has been a way to go, especially with yields pushing higher, pressuring JPY, supporting the dollar. It's also been good. Another super good job numbers as well could also provide another leg higher on this particular front. Although we have to contend with this overhead trend line resistance, right? Also key to what, if we clear this out, I mean, there's key levels to the upside I can watch out for. First is yesterday's highs, and then further weak highs around the 116.3 level. So there's that to watch out for. For AUD USD, also an interesting one. We've cleared out this overall support trend line coming from, early December. And then, yes, if we get another super good job print as well, we could look at this as well, right? For further downside, maybe looking to clear out. First of all, looking to clear out this key supports round number around the 0.715, right? Clear this out, retest for the downside, or a retest of this support level, resistance level, previous support as well. Also an interesting one, looking for weakness here. But on the other hand, weak job numbers, weak prints generally, obviously that would not be good for the dollar. I don't expect it to change, market expectations fully for Federal Reserve action, but obviously could give us, a reason for slowdown or a reason to, rethink about it, and that could not be or might not be as good for the dollar in the day ahead. Apart from the US job print, you're expecting Canadian job prints as well. Also interesting, although, I mean, unemployment is expected to remain the same. New jobs added is expected to be lower, way lower. So there's that to also watch out for in the day ahead. Apart from that, we're also expecting inflation data for Europe, right? That could be interesting as well, even though I don't expect this to really change, the European Central Bank stance currently, but right, is what we have, is what we can pay attention to, and what we should also pay attention to. So until we get all of this, until we get all these data releases, I expect markets to remain really tentative, remain in a slowdown mode until we get this. And well, when we see the data, we see the prints, then we know what to do, we know how to go about things. But it's Friday, remember, profit taking can also be a major way to go. The risking, positioning, before the data releases. All of this can also be something to play out for. So just keep it simple, keep it clean, and then let's trade safe. And then we'll leave it at that for now. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. And we'll always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.